Okay, team. Here we are once again, and I'm just gonna continue to use the same chart from the previous example, and we're going to be talking about uh, trading the N30's, which are the naked POCs. So as I described in the previous video, we talked about using the time volume profiles, which is a fixed time. In this particular scenario, we have a 2 minute chart, and the 2 minute charts right here. You can see the time frame right here, and the instrument is right here. We're going to be using a 15-minute bar aggregation, 15 minutes times 15 bars times 2 minutes equals to 30 minutes. So very important. I work and operate on a 30-minute time frame. There's a lot of reasons for that, so we'll discuss that as we continue moving along. Um, so the one thing I want to showcase is how important it is to pay attention to this 30 minutes POCs, point of control from each individual profile. So as we are focusing on working on this particular strategy, the one thing that I want to continue to elaborate on is the fact that uh, we are going to combine strategies into one. So it's very important to pay attention to not only the opening range breakout strategy that I discussed in the beginner's course, but also the N30's, which is naked. The N stands naked, and the 30 stands for 30 minutes POCs. As you can see, I have the chart set up for each and every one of these POCs to be extended, and you can change whatever color you want. I do not need the value areas to be extended. I just want the POCs. You can change it if you want. It's your preference, but for my particular I just want to see the 30-minute profiles with each individual POC. And if the POC has not been touched, it means that it hasn't been tested. I like the line to be extended because it's gonna give me a point of reference for the future. All right, so just to recap a little bit from the beginner's strategy, we talked about the opening range breakout. So we're going to do a little bit of that here, just real quickly, and we're going to determine the range of the opening range breakout in this particular scenario. I have to see why is the strategy plotting in different candles. Like this one is at 9:30, but it overlaps a little bit with the other one, so I need to figure out why that is. But that shouldn't change much. What we're going to discuss here in this particular scenario. So this is the range. So we're going to paint this white, and then we're going to talk about the period that is here. This is the first period, period A. So what I'm gonna do is I'm going to play back, and I'm going to play back to here, so you can see what happens as the candles are being developed. Okay. Um, so let me make it about 3. Okay. So let's hit play. Here are the candles. Okay, so let me back up a little bit. That's a little bit too fast. So let's try it again. Let's go back here because I want you to see something. So the market opens, and here are the bars printing. You can see how the low is formed right here. You can see how the high is formed right here. You can see how the POC is moving. Okay, see how it moved. What I want you to notice, and I know it went a little bit too fast, is that by the time this 10 o'clock candle opens, the POC was right here. in this particular location. So let's play that again because I need you to see when the POC is touched. That's the high. This is the low. Now you can see the candles printing. See the POC moving. It goes up. POC on the bottom. Goes below it. POC on the bottom here as price is moving up. Let's pay attention to that POC because it's right here and the time is 9:54. See the time here is 9:58. So technically speaking, this is a naked POC. If you notice, well, I don't know if you did, this naked POC was here and this candle touched that naked POC. That was from this Thursday, the 24th. It was touched right here. We'll let this play for a second and then I'll come back and explain what that means. So this is supposed to be our entry here. And this is supposed to be our stop.
Order submitted. Order filled.
Sorry, I have a robot working behind the scenes. So the way it should have looked like, it have been a long position from here. The next naked POC that I'm seeing is here. And the stop should be below the low of the candle. I haven't seen this trade, so I don't know how it's gonna end up, but I'm gonna let it play out. Actually, very curious how is it gonna go, because I don't know how this played out, to be honest with you. Okay, so technically speaking, it hit the target right here. And this just basically based on that naked POC. Let's see if there's something else on the top. Okay, so we have another. We're gonna let it play out to this naked POC up here and see how it goes. So our immediate target was hit. Market reacts immediately to that. It's pretty much 11:16 a.m. It almost hit it. It did now. So you see how the naked POC disappears once it's hit. It doesn't extend past this point because it was tagged. So this is the beauty of the naked POCs and the N30 strategy. So this is the N30 strategy, and that's how it's supposed to work exactly. Now, this is I didn't cherry pick this particular trade. It just happened to be that way that I had a POC here and I had one here. I did not see what happened here, so I would like to go back to when we touched that. So let's go back to this candle here and see where the market opened. So as you can see, the naked POC is extended. Actually, this one here is extended, and we're coming down. So let's just let it play out a little bit and see when that POC is tagged. Okay, so the market opened right here in a small gap down. It's a fair value gap from here to here, and it touched that POC, which almost immediately it went back to this POC here and immediately bounced. The next one will have been down here. Um, so that's basically how the naked POCs are supposed to work. If you don't have a trade plan, you can use them as targets. You can also use them as an opportunity to enter the trade. Uh, I use them for both, but more specifically for targets and more than anything else. And for me, it's really important. It's a very important tool in my arsenal, and I use it very consistently. If you have a trade plan with you, which I normally post the trade plans for the Nasdaq and the S&P 500 futures, um, you will also have those targets here, and it will help you to have a strategy in play to get out of the trade or to enter the trade. It just happened that in here, in this particular scenario, I'm only showing you the way to do it with the naked POCs. I promise you, it's not as simple as it looks, but in this particular example, it worked out as is designed. That's how I use them. That's how I've been using it for a long time, and it works really well for me. So thank you very much for your attention. Until next time.